Welcome back to the Trade Pro FX YouTube channel. Today, we're going to explore a very important topic: how to determine when to take a rise or fall trade on DERIV. We'll cover everything from understanding market trends to identifying key elements on a chart like fair value gaps, resistance and support zones, and demand zones. Plus, I'll show you how to analyze these on different time frames and use indicators like CCI, Williams fractal, and stochastic RSI for precise entries. Let's get started. First, let's talk about what we mean by a rising market and a falling market. You can see on the screen, a rising market, also known as a bullish market, is when the price of an asset is generally moving upwards. Traders look for higher highs and higher lows to identify a bullish trend. On the other hand, a falling market, also called a bearish market, is when the price is generally moving downwards. You'll notice lower highs and lower lows indicating a bearish trend. You should always start by determining the trend. Here on the screen, you can see how I'm analyzing the trend on a chart. I'm looking at the most recent highs and lows to determine whether the market is in a rise or fall. By identifying the overall trend, we can better prepare for our trades. Now that we understand the trend, the next step is to identify key elements in a chart. You can see on the screen that I'm focusing on a few critical areas. Fair value gap, FVG. This is an area on the chart where there's a discrepancy between the buyers and sellers. It usually appears as a gap in price action. To identify it, look for large candles or gaps between candles, which indicate an imbalance. You can see how I'm marking it on the chart here. This gap can act as a magnet, pulling the price back to fill it before continuing in the original direction. Resistance and support zones. Resistance zones are areas where the price has trouble breaking through on the upside, while support zones are areas where the price tends to stop falling and bounce back up. Look at how I'm identifying these zones on the chart. You want to find levels where the price has touched multiple times without breaking through. Demand zones. These are areas where there is significant buying interest, causing the price to rise. When you spot these zones on the chart, you can anticipate potential reversals or continuations. Watch how I mark them on different time frames, like daily, 4-hour, and 1-hour charts. It's crucial to analyze multiple time frames to get a complete picture of the market trend. Here's how we do it. On the screen, you can see that I've switched to the daily time frame. This gives us a broad view of the market trend, whether it's bullish or bearish. Then, we move to the 4-hour time frame to get a closer look at price movements and possible reversals. Next, we drill down to the 1-hour time frame to identify specific entry points. And finally, for those who love scalping, we focus on either 15-minute or 5-minute charts. As you can see, these shorter time frames help us spot quick trade opportunities for scalpers who want to enter and exit the market within minutes. To make our analysis even stronger, we need to use indicators for confirmation. Here are a few key indicators you can use on the TradingView DERIV.com platform. CCI, Commodity Channel Index. This indicator helps us identify overbought and oversold conditions. You can see on the screen that I've added the CCI indicator. When it's above 100, it suggests the market is overbought, and when it's below minus 100, it suggests oversold conditions. Williams fractal. This indicator helps us identify potential reversal points. Look at how I'm using it on the screen. The fractals show turning points where you can expect the market to change direction. This is very helpful in timing your entries and exits. Stochastic RSI. This indicator is great for spotting potential trend reversals or continuations. You can see here that when the stochastic RSI is above 80, it indicates overbought conditions, and when it's below 20, it indicates oversold conditions. These signals can be powerful when combined with other indicators and support/resistance levels. Using these indicators in combination allows us to enter trades confidently. As you can see on the screen, I'm using a combination of these indicators to decide on a rise or fall trade with a shorter duration of 3 minutes or 2 minutes for scalpers. And there you have it, traders. You can see on the screen, I've summarized the key points for you. We covered how to determine a rising or falling market, identify key chart elements like fair value gaps, resistance and support zones, and use indicators to confirm your trades. Remember to analyze different time frames and use indicators to support your decisions for better accuracy. If you found this video helpful, make sure to like, share, and subscribe to the Trade Pro FX channel. In our next video, we'll dive even deeper into scalping techniques using these strategies on different markets, so stay tuned. Until next time, keep learning, stay safe, and happy trading. Next, we will enter into a real-time entry and see how it goes. Stay tuned.